The panel is titled Green Finance Trends and Unlocking Capital Flows for the Maritime Industry. So there will be an online interactive Q&A session for this panel. So to post your questions, please have a look on the slides on the left and right. There's a QR code. Feel free to scan it. And once you scan it, you can enter the passcode that's written at the bottom of the QR code. This will allow you to click into the session that we have right now, ask questions, and also vote for questions that you want, that you feel more for, so that they will have a higher likelihood to be answered. And now, ladies and gentlemen, it's time for me to invite our panelists. Please give them a warm welcome as we invite them on stage. Allow me to introduce your moderator. Your moderator is Ms. Audra Loh, Chief Executive Officer, Clifford Capital Private Limited. Let's welcome Ms. Audra Loh, please. Welcome. Thank you for joining us, Audra. And joining Audra on the panel is Ms. Tan Beng T, Senior Advisor, Maritime and Port Authority of Singapore, and Executive Director, Singapore Maritime Foundation, SMF. Let's welcome Ms. Tan Beng T, please. Welcome, Ms. Tan. And joining us online, we have Stephen Majeski, Managing Director, Maritime Funds, Hayfin. Hello. Thank you for joining us, Stephen. And thank you for your applause as well, ladies and gentlemen. And next we have Mr. Julian Proctor, Chief Executive Officer, Purus Marine. Let's give a warm welcome. Mr. Julian Proctor, please. And last but not least, we have Mr. Chu Keng Sin, Regional Head, Shipping Finance, ASEAN and South Asia, Standard Chartered Bank. Let's welcome Mr. Chu. And ladies and gentlemen, let's give a warm welcome to our entire panel. Welcome. And you may remove your mask as well. Thank you.
Good morning, everybody. It's such joy to see such a full room in this very bright, in a very, very bright setting as well. So today we're going to discuss financing, and in particular green financing. And we have a very fantastic panel here with us today to do that. So I think we're sitting here in a period of relative boom for the industry, which is really nice, a really nice change. And the shipping finance markets have also been looking quite healthy. I have a couple of slides that we've prepared just to set the scene. Next slide, please. Right, so you can see that if you look at the volumes of financing that's been made available to the sector, it's actually been steadily climbing. In 2021, we've got something like 25 billion in debt financing made available to ship owners globally, and another 6 billion in equity. That's actually been the highest it's ever been in 3 years. If you look a little carefully at this chart, you can see that there's also a very healthy uptick of green financing, especially in the loan market. Many of these have really been in the form of sustainability-linked loans, or SLL for short. I suppose that's not surprising. Green bonds are not necessarily suited at this stage for the sector, because a lot of the vessels are still being powered by fossil fuels. Unlike green bonds or green loans, SLLs are they're not they do not restrict the use of proceeds to green projects. So instead, they are structured such that a borrower can enjoy pricing discounts, or in some cases, they have to pay a little bit more depending on how well they've done in terms of achieving certain sustainability linked targets. And you can see here, with the chart on the right-hand side, half of the financing, in particular the loan financing done last year, was really in the form, or largely in the form of SLLs. Next slide, please. So we've taken a selection of some of these deals that were done in the last year, just to share, how have these deals been structured. You'll see that many of them are actually tied to targets around a reduction in greenhouse gases and also in carbon intensity. In some of these cases, they also have targets that are aligned with IMO 2050. Maersk has even gone one step further. They say that they will try to reach net zero by 2023. That's next year, mind you. But of course, that's just limited to their biomethanol vessels for now. But hopefully, we'll see more of those to come. On the last slide that we have here today, I think what we wanted to share is that we are also seeing a definite uptick in terms of the investments in environmental technology. So certainly Musk is not alone. Another tidbit, according to Clarkson's, some 61% of new investments in Q1 of this year is in alternate fuel vessels. So with this nice momentum, and also this nice momentum that we're seeing amongst banks and investors, is it going far enough to support a sensible transition for the entire industry, considering that alternate carbon-free fuels might still actually be some time away? So with us today, we've got this nice panel. On my left, a lady who needs no introduction, Ms. Tan Beng Tee, Senior Advisor to MPA. And to her left, we've got Julian Proctor from Purus Marine and Chu King Sin from Standard Chartered Bank. Joining us online, Mr. Stephen Majeski from Hayfin Capital. We've got a wide selection of different players in the industry, across the finance industry. So perhaps we'll kick off with the first topic. What's the state of the finance markets, and in particular, the green finance markets? Are we seeing a lot of the action here in Singapore? King Sin, would you like to take that first?
Thanks, Audra, and a very good morning. It's good to see everyone again after a long time, many familiar and new faces. And I think you've hit the nail on the head that from a green financing perspective, there is as much as demand there are investors' demand for green financing in the maritime sector. There has been relatively limited uptake, because of the taxonomy of how green financing is set out. But before we go into that, I think from a ship financing perspective, the fundamentals are looking good. I mean, the industry has been going through a rough period for a very long time, and every year when I go to a conference, everyone is always talking about being cautiously optimistic. This is one of the few years where industry players are actually optimistic about the future, and I'm heartened by that, because then that allows our clients and industry players that have the balance sheet to invest into the future. So from a financing perspective, I think fundamentals look right. I think there is liquidity coming back into this sector, investing, and it's the fundamentals has not changed. Effectively, it's credit cash flows that will follow. Going into a little deeper in regards to your question in regards to green financing, again, we saw the very nice table. The uptake is very much what I like to call transition financing, and this is a reflection of where the industry is going to. At the moment, the way green financing is set up doesn't quite suit the maritime industry. If you are still burning fossil fuel, if you're not at a net zero trajectory, if you're still carrying fossil fuel, you don't qualify for that, and that eliminates more than half of all the players in the world today. But I'm heartened by the many conversations that have happened over the last 18, 24 months and what's going on in the last week. And I'm looking forward to hearing from Julian on what he's doing as well. On the steps to meet our net zero ambitions. So there has been a lot of my peers who are supporting that change, whether is it to dual fuel alternatives, regardless of the pathways different operators are taking. And likewise for myself, I think that's a conversation that is inbuilt to every deal that we are doing now. How are you going? What is your transition plan? What is the climate risk that you're facing? How are you managing that? So I'm heartened that the fundamental conversations on credit and cash flow now include another C, which is climate risk. And that I think that is where the industry needs to go for us to propel to the next change. I want to kind of take 1 minute to call out, what the fundamental difference between kind of transition financing we're seeing and the green financing that the investors taking, and it kind of boils down to a very important piece, which was discussed yesterday in a finance forum, where finance, who will then be taking the innovation risk for us to push into the next stage. Right. And I think that's where further collaboration is needed. I'm personally going to take this back to understand, how do we how do we look at the taxonomy today to incentivize investors, to incentivize banks, to support operators and investors who want to invest in technologies that move to the next stage, whether it's that ammonia, methanol, hydrogen, etc. So hopefully, that answers your question in regards to the state of financing today and in between green and sustainable and transition here.
Thank you, Kingston. I think we'll come back a little bit more to talk a little bit about taxonomy and unlocking more capital flows for the sector. Let's go on to a different financier, and I'd like to invite Stephen, who is joining us online, to share his thoughts, perhaps from his alternative space, and also from his part of the world. What are you seeing over there, Stephen?
Yeah, well, thank you, everyone. It's a pleasure to join you this morning. I think from an alternative lender perspective, I think green financing is something we looked at actively a couple of years ago. And certainly it got very, very competitive with certainly new sources of capital coming into the market. So it's something we haven't been actively involved in as it relates to really green projects, but more we focused on really the transition, really the transformation of the industry from its traditional business model to developing a business model that's more aligned, with the decarbonization goals of the world. And it's a long process. It will certainly take a number of years, but we see our role as an alternative lender to implement standards for our borrowers, or in the event that we actually own ships, for our own fleet to implement standards to help with that transition and meet those goals as we work through the next 10 to 15 years. So that's something we're focused on, and certainly working for a European credit fund. Certainly it's very high on our agenda, and it's something we're really focused on, both for our own investors, but also for our borrowers and our other service providers, and making sure that everyone is on board and all the stakeholders are fully supportive of this whole green transition and everything that we need to do collectively as an industry.
Okay, thank you, Stephen. Perhaps we can move on next to Julian. With Purus Marine, I understand you have a very, very strong focus on green vessels in particular. I'm sure you've got no shortage of capital providers with money to deploy going your way. So do you want to also share with us how you're deploying some of this capital, perhaps?
Good morning, everybody. So we own a wide variety of different types of businesses, from offshore wind companies to ferry companies to very large gas carrying assets. But they all have one very common theme, which is that the most advanced, environmentally advanced pieces of equipment available today. Now that in itself would indicate maybe the pools of capital would be deep and substantial to finance them. That's as a borrower. Now, we happen to be very fortunate. Our shareholders are governments. Some of the largest governments are very close to Singapore. But I will tell you that the pools of debt capital available for green businesses today is still very sparse, very limited. If I look at our ferry business, we have, and I use this by example only, we have 2 large ferry businesses in the Benelux. We move about 3 million people in each market. We have the very first zero-emission transportation system, EV ferries, superchargers, storage systems. It's amazing. It was incredibly difficult to find European banks to finance that business, even though we have the government as our customer. And it gets back to the way the banks are regulated. The banks are regulated with a regime which is very much asset-based focused. So there needs to be education with the central bank policymakers, which will trickle down to the banks at some point in the future. So European bank capital for our businesses remains scarce. What we find much deeper is the insurance market in Europe. The insurance market is maybe not as educated, but the regulatory backdrop is very different than the banking environment. Much more supportive. And what may shock you is the deepest pool of capital for some of our businesses comes out of Asia. Japan, China. So part of the answer lies in the fact that we do mostly project-looking financings. You have a business that has contracted cash flows, government offtake, public-private partnerships, because you need that when you're investing. You have businesses which have technology risk and the large amounts of capital exposure that we do. So what type of banks are most comfortable to provide the capital to businesses like ours? And that's generally those which have a very strong project finance mindset. So that leads you to certain types of players, right? But it doesn't lead you today to the most traditional lending banks that you would associate normally with shipping. So if I was to pass that on a little bit to Audra, you have to have diversity, and we have substantial diversity in where we get our debt capital from, insurance companies. You need global diversity. Our lending banks come from some very small places in Japan to some very large cities in China, to the usual people you expect in Europe. But there's no one size fits all. Each people like a different flavor of ice cream, to use a very bad analogy, but it's the truth. So I'll just stop there. Thank you.
Okay, very good. I think there's a lot of points we can pick up on a little bit later on in this discussion. Peng T, should we just come to you first? In your work with MPA, you talk to a lot of ship owners, you talk to a lot of, people in the ecosystem. Are you also hearing the same thing? Do we still need to unlock more capital for the sector?
Yeah. Oh, okay. First of all, a very good morning to all of you and to some of my friends that are not unable to greet you in person, please forgive me, and a very warm welcome to Singapore. So Audra, now specifically to your question. Indeed, when we speak to shipping companies, finance and access of capital has always been one, of the grounds that they have. From MPA's perspective, we actually look at short-term measures and long-term measures. And short-term measures, we look at how we can actually facilitate some of these issues on taxation to actually help them to be able to get access to funds. But the longer-term measures that we would want to do, and it fits into what Lei Hun said, we want to actually be a place where there's access to a diversity of different types of capital. So like what Julian said, it should not be just traditional financing, because for traditional financing, sometimes the banks may be locked in by protocols and by Basel Convention, or even the regulations, regulatory requirements. So and shipping is actually evolving, and shipping is evolving to the extent that people are looking at various sources of financing. Some that are cautious may actually look at traditional financing. Some that are on expansion mode may look at equity financing. And if Singapore is actually able to provide a suite of services to meet the various needs of the companies at various stages, that is something that we want to do. We were a bit sad when some of the banks decided to exit from shipping, because at our peak, we have got 25 shipping banks in Singapore. Today, we've got about 20. And because we are faced by that, we decided that, look, we got to go beyond banks and look at other forms of financing. It can be leasing, because some of the companies may decide to have ownership as well as leased vessels, and it could be more equity participation. So I'm glad that Julian decided to set up in Singapore. So I've chased him from Hong Kong to London, and then finally he decided to set up in Singapore. And Julian, can you add diversity to the sector in Singapore? So that's what I have to say. Thanks.
Okay, thank you. I think we have a very nice segue to talk about sort of how we can bring more capital providers in. So maybe starting with the debt markets, right, and talk a little bit about taxonomy. Kingston, what are your thoughts? Because I think from what we've seen, we've got the EU taxonomy for green finance, for example. I'll just quickly say here that, according to their guidelines for maritime transportation, for financing or investments in shipping to be considered sustainable, the vessels cannot be used in the transportation of fossil fuel, and they must be aligned with the pathway to limit temperature increase to 1.5 degrees by 2050. And what that means is net zero. And mind you, IMO themselves are saying that they are only going to be targeting to reduce carbon by 50% within that same time frame. Do you think the taxonomy is just setting the bar too high? And what can we do about that around here? Your thoughts, Kingston? Thanks,
Audra. I mean, I think that's a question that I debate with my peers all the time. Most recently, yesterday. I think the bar needs to be set high because you need to aspire to an end goal where the entire world is going on, because that goal is not something that shipping is on loan. It is across industries, where in shipping, 2/3 of the decarbonization efforts need to happen onshore. Whether it's developments of infrastructure to provide that alternative fuel, the supply chain that provides that, the collaboration between various port authorities and states to encourage this. So it's always good to have that bar set high. Right? Where I do think we need to encourage is creating a framework that supports what the industry is going through today. And I think that's where we are seeing now a huge uptake of sustainable linked structures, or transition financing, as I like to call it. Right? And it's important that the efforts that the operators or investors are taking to move, whether you define it as marginal steps, there are realistic steps to take decarbonization. Recognition needs to be given to them, enable to attract investors and bankers to support them. And then kind of alluding to the point, I kind of represent the voice of corporate bankers, corporate lenders, right, where we operate at a very clear box. And if you don't check that box, the amount of pricing, the amount of capital I need to set aside will be fixed. So rather than say, change the goal, I think we need to have recognition of the transition the industry needs is playing. I'll give you an example. You mentioned the the European framework. I mean, I think where sets a very high bar. We have seen, for example, in Japan, where they do recognize the efforts the players there are taking, whether it's investing in alternative fuels, where some might argue it's less stricter, but that allows investors and operators there to access green liquidity, if you want to put it. So I don't think we should change the bar. I think we should find ways to recognize the efforts that other players are taking to transition.
Thank you. Beng T, perhaps I come to you. Do you think there is room and scope for us to perhaps develop a more Asian-centric taxonomy, for example, that recognizes that the transition is not necessarily that straight line, right? Like perhaps if some of these alternate views are taking a little bit more time to develop, what can we do in the meantime, that comes up with guidelines that are perhaps a little bit more sort of fit for where we are in the cycle?
So I think having taxonomy is good because it actually unifies language and then it creates a standard in the process. But I'm a bit concerned when standards are set too high, because when standards are set too high, it becomes unrealistic. And when it becomes unrealistic, it becomes a demotivating factor. And shipping industry is an industry that you cannot actually just apply a universal application of everybody should ascribe to, but in the end they should. But the process should be a bit differentiated. So in a way, it is also a good approach. Let's say if we look at a standard in the region, because the players, the sizes are different. And you need to bring them on board, because if you don't bring them on board, things do not move. So what is a good threshold to bring them on board? So developing regional taxonomy is good, but it should not be silo. Eventually, this taxonomy should actually be interoperable, because it is only for transition, and it should actually then fit into a global standard that the industry is comfortable with.
Yeah, I think that's really important. Right? If you want to sort of be a little bit more accommodating, there's always risk that you might be labeled to be greenwashing, right? So that's definitely a concern. Stephen, if we could perhaps move on to you. I mean, I think as an investor, and I do know that you're active both in equity and also in the debt markets, do you find also that this bar is perhaps set too high? Are you doing things that allow you to meet all these aspirations?
I think I can take this approach from a little different perspective. Being a European-based fund, we have a number of funds, but we are based in Europe, and certainly the taxonomy and SFDR 8, Article 8, are all very applicable to our business. So it's something we really need to consider. There's regulatory mandates that you need to follow, but there's also other mandates that are voluntary. So in addition to the regulatory side of things, there's investors, right? I think your investors, if it's pension funds, if it's insurance companies, other institutional capital, this is on everyone's radar. And certainly working within a credit fund that sources their capital from institutional money and investors, it is on everyone's mind. So it is something we are acutely aware of. It's something we've been addressing for a number of years now, having an ESG committee in place and really embedding an ESG framework into how we underwrite transactions, and really now taking that next step and expanding that to include new standards linked to the carbon emissions, and achieving the goals that not only we want to see as a management team and as a fund, but also the goals that our investors want to see. So it's something that's embedded in our underwriting process when we underwrite transactions, when we underwrite new management teams, but more importantly, also making sure there's quantifiable measurements that you can put in place. And there's the ongoing monitoring of this stuff and taking actions as needed, as well as the reporting to your investors. So I think it's a collaborative effort amongst our investors, ourselves, and our clients. So it is something acutely aware of, we're embedding into our investment process.
Maybe a follow-up question for you, Stephen. Do you think that is actually making it easier in terms of fundraising from some of the institutional investors, perhaps? And is it making it easier also, this focus on ESG, in terms of deploying this capital?
I think if you have a good framework in place internally, not only a good framework, but a demonstrated framework. I know everyone uses the term greenwashing, et cetera, but I think if you can show that you have a framework in place that's been there for a while and has demonstrated results, and there's real actionable measures that you are taking as a firm to manage your investors' capital and deploy that in a very prudent manner as it relates to the different regulations and carbon emissions. So yes, I think if those investors that get it right, or those management teams and funds that get it right, will continue to attract capital. Obviously, being based in Europe, it's got a heightened importance compared to other geographies in the world. But also, when you look at our client base, shipping, maritime is just one part of our overall book of business, and we do a lot of business with middle market European companies, and certainly that's very important to them. So it's it's building that culture internally, and really adopting it and taking the measures as needed. I mean, there's so many different regulations. There's so many changes on a daily, quarterly, annual basis. But trying to implement all those different new standards into your various businesses and developing a cohesive framework that works. And that's what we're really trying to achieve.
Okay, thank you. I guess with all this focus on green, and I guess for owners that perhaps have older tonnage that haven't actually dedicated or had the resources to dedicate to sort of making some of these green transitions, at Standard Chartered, are you doing anything to help your clients move this along? Because we obviously would be concerned that some of these owners might be at risk of not having financing available, especially if they have older tonnage.
Thanks, Audrey. Definitely, I think from a corporate banking perspective, it boils back to fundamentals, and I kind of alluded earlier. It's down to credit and cash flows, and we're adding now the additional C to part of the conversation, which is climate risk, right? And that's the conversation that we are having with each and every one of our clients to understand where are they in their transition journey, how are they strategizing and preparing for the inevitable change, whether that might be their customers demanding stricter standards, regulators putting on carbon taxes, or even the risk of potentially assets being stranded as the world moves and they're sitting alone. So that's a conversation that we are having with each and every one of our clients to understand that.
Okay, very good. I think let's talk a little bit about bringing more capital into the industry. I think, Julian, you had some very interesting points about reframing how we think about shipping. I think the decarbonization theme has infected everybody, right? And I come from an infrastructure background. It's very pertinent here. It's actually drawn a lot of interest, a lot of new capital. Can we perhaps reframe the way we think about shipping and deploy some of that capital into this space? You talked a little bit about that in your earlier remarks. Do you want to sort of pick up on this topic?
One of the observations that you sort of look at as you do this for a while is people associate shipping with cyclicality, and they associate it with good times and bad times. And as a result, the capital which will support that type of business becomes more conservative, it becomes risk-focused. Now, if I was to tell you another more ambitious story about very long-term structural trends, such as what is happening now in the offshore wind industry, or the mammoth infrastructure bills which are being passed in Europe to support mass transit river systems, or the built urban environment, it's a much more positive story. And marine can fit within a lot of these different narratives, because marine is about the production of energy, fish, movement of people, goods, commodities. But depending on what narrative we attach ourselves to, it can create a very different response from our capital providers. So when we talk to a lot of our lenders in our businesses, we like to focus on those themes, those stories which are mostly attractive and can be well received by them. So in the offshore wind business that we have, and we have a very substantial offshore wind business in Europe, there is a large and substantial pool of capital for it. It comes from insurance companies, it comes from a select number of banks, but this narrative is very, very important. Because what I find is, if I look at the more traditional part of our business, which are these big gas carriers which have got long-term contracts, the traditional banks like that business because it is perceived as low cyclical, it is perceived as low risk. But that doesn't do anything if you're trying to build the other businesses that I mentioned, which are more forward-leaning, which are more aligned with the energy transition, and ultimately you're trying to do what we're all talking about here, which is make a better place for our children, our children's children over the next several decades. So changing the narrative is incredibly important.
Very interesting. So I think that I'm hearing sort of some themes. We have some ideas in terms of how we can potentially expand the pool. In infrastructure, we talk a lot about risk allocation. Kingston, you talked about the fact that now with decarbonization, we potentially have to embrace some of these new technologies. Bankers are terrible at embracing new technology. We're always looking for the tried and tested and proven stuff to finance. So perhaps there's some scope to do a little bit of risk allocation. Where do you think we can find this appetite for innovation? Should it really just be the owners, the operators? Can governments play a role? What do you think, Kingston?
Great question. I think different sets of investors will have different mandates, different yield returns, and kind of different places that play in the capital structure. Right? And I think that's where events like this is encouraging. It encourages the conversations of different pools of capital coming together to solve. Right. From a, as you rightly pointed out, from a corporate banking senior lender's perspective, we are the most efficient capital, but likewise the most risk-averse capital. Right? And we do like to see proven technologies. The irony thing is that while we are pushing our clients to move forward, we want to make sure, we want to know what, whatever the investing has been done for the last 10, 15 years. So that's a little kind of oxymoron. We're in an odd place at this stage. It requires a little bit of creativity, I feel. I mean, I think as some of my fellow panelists alluded to here earlier, we all operate currently in our various boxes. This is how we think of a certain approach. This is this is how we've been doing this business for the last 20 years. This is how we will want to do business. At Synergies, I think we are a little bit gray. I like to keep it simple. Whilst we're shipping, I look at anything that floats across the supply chain, whether it can be vessels that operate spot on a volatility basis, or projects that have long-term contracts, and kind of balance that out. So to answer your question, I think that creativity and flexibility needs to come in place. It's a collaboration with whether regulators or industry leaders to set that benchmark, but also with other investors coming in to invest, to look at new projects. For example, electrifying harbor tugs, and how can we play a role, together with investors who are taking a riskier piece of that capital structure, and we, coming in to play that a part in that.
At one point.
Please, go ahead.
I'm going to use as an example, it's about education as well. Do you mind if I talk about tomorrow morning?
Please, go ahead.
So we have one ferry system in Antwerp, which we move a large number of people in that city. We'll be looking to upgrade the technology that we utilize. Either we will fully electrify, or we will likely move towards hydrogen. Now that involves substantial capital. So it requires a partnership, in that case, between regional government and business owners like ourselves. You take risk, especially when you're taking new emerging technology risks. You need to have contractual supports. You need to have these longer-term partnerships. But importantly, you need to have lenders. In that case, it's a large Japanese lender, bank. But what we're trying to spend more and more time with, because we understand the gap which is forming up between what our businesses do and how we do it, and explaining to our financiers what they do. And there's a gap in education and knowledge. So for example, one thing we're doing is we have actually, to my left, our friends from Standard Chartered Bank will actually be in Antwerp tomorrow to see the ferry system, a very senior management of Standard Chartered Bank. So we spend time with our shareholders, with our lenders, with our prospective lenders, educating them, seeing our businesses work, explaining the technologies that we have, and explaining the partnerships that we've formed to manage the risks that we face and the technological risks that we also have. So it's a slow process, but it's an incredibly important process. But it goes back to collaboration and education and building the trust.
Okay, Beng T, you next.
Yeah, just to add on, I just picked some words from both of you. KS mentioned about being different people have different mandate, and with the different mandate, there will be different risk appetites. I think Julian mentioned about expansion of the narrative. That means to go beyond the story that shipping is cyclical, so that you don't instill fear in people before they even look at the product. And yet we are also conscious about the need to decarbonize. And it is a subject matter that we cannot push away. And as each day passes by, that just comes nearer to us. But I also want to address the issue about the market. That shipping is actually quite a fragmented market in a sense, not only by product and ship types, but also by the profile of the companies. So you've got companies with real deep pockets that can do work on their own, and you've got some companies that have smaller pockets, but yet to survive in the business, they need to do something. Yeah, and Julian also mentioned about collaboration, that going forward, because this is a big issue, and for a big issue like that, all of us must collaborate. And because of all these reasons, MPA did two things last year. One is we formed an international advisory panel on decarbonization. And the objective of this panel is to understand the pain points of the different companies in the different segments. And then with that, we came up with some recommendations. And one of the recommendations is for Singapore to set up a global center for maritime decarbonization. So when we set up the center, it is really to serve the industry because it is a big issue and it must be a collaborative issue. So GCMD's mandate is actually to look at gathering of information, sharing of thought leadership, and more importantly, to actually do pilot tests. Yeah. So I wanted to just share this with the audience. The other area that we have is we have also got Maritime Singapore Green Initiative Fund. And that fund was actually created as a kind of motivation. It is not big money, but it's actually to help people to look at green issues. So it could be in the area of research, and it could be in the area of adoption. And also for Singapore's flagships, it is actually to motivate them to actually look at IMO rules, to go beyond the IMO EEDI rules. So just wanted to tell you, to share that from a policy perspective, although we cannot lend you money, but what we are actually trying to do is to frame all the issues and then come up with measures that all of us can actually join, and all of us can actually then come and solve issues.
Okay, very good. I think that sounds really good. There's definitely scope for more collaboration and partnership. Again, drawing from a space that I know well, infrastructure world, we talk a lot about allocating risk to parties that are best equipped to bear this risk. It sounds like a lot of people in this industry is also embracing very similar principles. So maybe on that note, we can move on to some of the questions that are coming through Pigeonhole. I'm not sure whether we can pull up the questions on screen. Okay. There is a question here with a lot of votes on SMEs. There are probably a number of them in the audience. The question is, what can SMEs do to have a fair chance of tapping on green financing? Maybe we should start with the banker on this panel and also the alternate investor next. Kheng, you want to kick off?
I think before addressing the point on green financing, we do have to acknowledge that the SME segment struggles to access general, banking liquidity, right? Agnostic of the underlying current, right? So the fundamental challenge is there. Right? Again, this kind of boils back to the different mandates that different investors have, where on the corporate banking side, where it's the more risk adverse, and you have investors that are able to take that risk, right? And I don't want to pass that buck to to Stephen or Julian, but that's where I think we all need to play a role. I think there are pockets of liquidity that I see of investors who are prepared to take that additional risk as some of these, as the SME also transition in their journey to decarbonize, right? I think where we can play a role from a corporate banking perspective is again a collaboration with governments, with organizations. For example, I'll give you an example, ECAs, so, that's a source of support that we work very closely with, that we are able to participate in a meaningful manner if we have support, right? And if there is support coming from ECAs in regards to wrapping, investments, that's where we're prepared to deploy capital. So that's one idea, and something that we are also actively looking at.
Very good. So Stephen, on to you next. As an alternate investor, do you have better risk appetite perhaps for the SME segment?
Yeah, I think that's probably something that is more related to our credit fund and more of the more traditional financing side of things. I mean, it's from our perspective as a credit fund in maritime space, we generally underwrite bigger tickets. $40, $50 million all the way up to $250, $300 million. So we generally don't have small pockets of capital, but certainly we're always open to new ideas, and to the extent the capital need is large enough, I think we're, as an alternative lender, we're creative about how we can think about things and how we can approach risk underwriting without having kind of the more stricter guidelines and mandates that banks might be accustomed to. So it's always something that we can look at and see if it fits within the scope of our maritime business, or alternatively you look into our more middle market lending type business within our funds. So I know it's probably not an exact answer, but yeah, it doesn't hurt to have a dialogue.
Just one
Sure.
point.
Yep.
Some of the business that we have, or some of the business that we've acquired, which is now part of some of our divisions in our group, they have this problem. But there are amazing subsidy programs and grants which are available globally. This is where I find whether or not you're in Europe, Singapore, different parts of Asia, US, which support small and medium-sized businesses with very cost-competitive capital, guarantee schemes, direct subsidies for businesses prepared to innovate and take the risk. So I wouldn't necessarily look to, banks are very important, or and so are the alternative financiers, but I would look elsewhere, because that's where the really attractive capital is. In the United Kingdom, and I've only been there now for a few months, I'm getting to learn the place, they have very, very attractive financing schemes. In Norway, where we build a lot of our equipment, massive subsidies from the Norwegian government when we use batteries and electrification. When we use biofuels or purchase biofuels out of Amsterdam, massive subsidies from the Dutch government. So you've got to be creative, you've got to search, you've got to look. And ultimately that's what SMEs that succeed and don't succeed, that's one of the critical factors. You either want to win or you don't want to win, but it's there. But don't look to the most obvious sources.
Good advice. Okay, changing tacks, slightly different question here with a lot of votes. As financiers, how do we ensure that we mitigate against greenwashing that might occur in this industry? We've got two financiers here, but certainly as a business owner, Julian, also welcome your views. But perhaps, again, Kheng Sin, take the charge.
I think partnership with across the supply chain is necessary to ensure we hold each other accountable. I think firstly, we need to acknowledge that this is a journey that that we are all taking together, and there will be inevitable wrong steps that each of us make, right? But I think as we go along this journey, it's important to be very clear on the end goal that we were trying to achieve. I think that we talked about it slightly earlier on the standards we're trying to put, to be very clear on the framework that we set on how do we progress on this journey, right? And then with that collaboration with third party, I think there was conversations with the Global Maritime Decarbonization Centers, DNV yesterday in their initiatives of what they do. I think they help set that framework, they help set that benchmark, and also help set keep owners accountable and give comfort to lenders like ourselves when we deploy capital. Right? And we are also seeing as technology improves, that process becomes not only easier but also more commercially viable. With sensors being installed in ships, with newer ships coming up that has technology inbuilt to facilitate this process. We're currently working with Beng where we challenge students with the same problems that we're all facing today, and they are coming up with the same solutions that we are debating, and I'm heartened by that because the next generation is already talking about this process, and they will, if we can't find the solution today, I'm very heartened to see the next generation, standing behind me are thinking about this already.
Good. Well, it sounds like with technology, perhaps all these greenwashing accusations could eventually abate. Beng, is that also a concern? All this, talk about potentially greenwashing, whether it's just operators not taking sufficient genuine steps towards decarbonization. What do you think?
I think for the industry to be credible, it is important that we should not be branded as greenwashing, but we should be actually truly embracing the need to be sustainable and to go green. Yeah.
Okay, very good. Julian, any thoughts?
I think we've all matured a lot in the last 5 to 10 years, right? So when you had a green ship, or the company's called Green Ship, that was greenwashing. That there was nothing green about not that particular company, but I think we understand that's not working. And I think we understand when there's EV ferries or EV tugs, they might just be working. They might have an impact. So I think it's also important not to overdo some of these issues, because if we assume that we're all adults and we all can think and process and look at the situation, then we're going to come to the right decisions and the right conclusions. And I will also say that there is phenomenal steps being taken in terms of how we collect data, how we validate data, and how we report on, and how people will call you out on it, right? Because there's so many times now where people will say we do X, Y, Z. And somebody will go and say, no, you don't. And they'll put it on Twitter, or they'll put it on Facebook, or whatever social media. So I'm very confident that those people who greenwash, they're going to get called out, and nobody's going to deal with those type of people.
So being called out is a good thing. Make sure that people focuses on investing in the right things as opposed to things that just appear to be doing the right thing. Okay, very good. A question here on technology and finance. How do financiers and tech companies equip themselves to communicate with each other to create synergies and accelerate decarbonization? Very broad question. Who's brave enough to take that?
I'll take a quick stab at it.
Can we pull up question, perhaps? I'll repeat it again. How do financiers and tech companies equip themselves to communicate with each other to create synergies and accelerate decarbonization? So perhaps it's a matter of, how do you get financiers comfortable with all this new technology to be able to embrace them a little bit more? Is it just a matter of education? Or perhaps maybe there are some incentives from the government, perhaps, to incentivize the adoption of some of these new technologies.
I think we discussed this, right? It's to get business, because it's a business question, right? To get businesses to and make the investments in technologies, you've got to have a framework which supports that investment. So we look at our wind assets, we have contracts with big renewable energy companies. We're not going to put hybrid systems on our marine assets unless we have a framework which supports those very sizable investments that we make. So part of it goes back to what we said before, which is partnership. You need to have a renewable energy company which is demanding low carbon logistics solutions, moving people or goods to the wind parks. People are prepared to pay for it, but are also prepared to do it in a way which is going to give a reasonable return to the business owners as well. Then we will make those technology investments. Second, government can play a massive role. And again, I'll go back to the Norwegians, and what I'm noticing in the Benelux, they are really leading the charge. There's very strong stimulus coming from Norwegian government with regards to innovation. They are defraying the risk when business owners like us make those big investments in battery systems, energy storage systems, which are needed. They will help us make those big capex investments. And if the governments are also prepared to pay through subsidies or through, again, some form of contractual framework, we have that in some of our other continental European businesses, we'll make those investments. So it's more, to me, about the business environment and less about the financiers behind it. Because once I know I have the right business, then I can find out which pocket of capital will ultimately provide the money to get it done. But it's a business question.
Apologies for interrupting, Audra. Our time has come to an end. Would you be able to sum up for us? Thank you.
Yeah, okay. I think we've had a very interesting conversations about how we can unlock more capital for a very soon to be invigorated industries with new technology, green technologies, no less. So let us please join me in thanking all our speakers who've with us today to discuss this very interesting topic. Thank you all speakers.
Thank you very much to our speakers. And Audra, I would like to invite you to please stand and join us on this line over here for a photograph. You do not have to wear a mask at the moment. You can keep your mask off. You can put it behind you. We'd just like to have a official photo. Is this okay? Is this okay? Wonderful. Ladies and gentlemen, big hand for the panel, please. Thank you.